If you have been watching the news, you probably realize that almost every billionaire, analyst or economist has warned us that a financial crisis is around the corner. From Warren Buffett and Charlie Munger, who talk about the speculations in the housing market, to Michael Burry, the big short investor who is betting $1.6 billion that the stock market will crash, and to Barry Stern, one of the world's most successful and respected real estate investors who predicts an economic hurricane to hit us. It's not a surprise that 70% of Americans think a recession is coming. It seems like we are on the brink of economic catastrophe. Recessions in the United States are not uncommon. While recessions may sound catastrophic, they're a natural part of the economic cycle. Before the Federal Reserve was established, recessions were more frequent, occurring every 2 to 3 years after a period of growth. However, with the Fed's interventions, longer periods of economic expansion, even breaking records like the recent 10 years and 8 months, have become more common. Despite this, recent events suggest we may have reached the limits of using the Fed's policies to prevent recessions. So, how can we prepare for the next recession, benefit from it, and come out financially stronger? We'll answer all of these questions and much more. 1. Always keep cash. When tough times hit, having cash is like having a safety net. People get excited about investing in things like cryptocurrencies and digital art when everything's going well. But when there's an economic downturn, even the rich start selling investments and keeping more cash. Take Warren Buffett, for example. He's not the flashy type, but he's wise. He keeps a lot of cash waiting for a good opportunity. So how can you prepare for a recession? Start by cutting down on unnecessary spending. Even small expenses add up, especially with prices rising due to inflation. Remember, saving money is key when things get rough. Your financial stability is in your hands, so be smart with your money, even during uncertain times. We're facing supply chain issues that are driving up prices, and it could take a year or longer to resolve them. So, if you want to be ready for the next tough financial time, remember one thing: save your money. It's your best friend when things get rough. Remember, it's not about being a financial expert, it's about being smart with your money even when things are uncertain. Your financial stability is in your hands. 2. Invest in liquid businesses. During tough financial times, companies struggle, and some go out of business. Employees have bills and families to support, making it tough for businesses to operate without money. In the 2008 economic crisis, major companies like General Motors, Chrysler, and AIG faced bankruptcy, needing help from bigger, more stable companies or the government. When considering where to invest your money, choosing businesses with substantial savings is wise. It's similar to having a financial safety net for challenging times. Companies like Apple and Microsoft consistently maintain significant cash reserves. Even as prices rise, they prefer to see some of their money lose value gradually rather than risk running out of funds during a recession. You can check how much money a company has by looking at its financial reports, especially the balance sheet. This way, you can see if they've got enough cash to stay strong in hard times. Just keep in mind that not all companies will have as much extra cash as big names like Apple do. 3. A recession is an opportunity. While it may appear to be the worst time to start a business, the reality is often different. During economic prosperity, competing with established companies is challenging. However, when these big companies encounter difficulties, startups can thrive. Consider WhatsApp, which began in 2009 amid an economic crisis. Facebook later acquired it for a staggering $19 billion. Now boasting over 2 billion users, its value has soared. Uber is another success story. It also began in 2009 and is now valued at nearly $50 billion, despite not making much profit yet. There are many other examples like Pinterest, Venmo, Slack, Square, and of course, Bitcoin. Even Tesla, which almost went out of business during the crisis, didn't just survive, it became one of the biggest players in the car industry. While other car companies were struggling, Tesla stood tall. But it's not just about starting a business, it's also a great time to boost your career. When things are tough, stepping up at work can help you move up the career ladder faster. Just look at how many junior managers got promoted when things got tough in the last crisis. 4. Don't cash out. It's easy to be patient when everything is growing. If you bought Bitcoin at $1,000 before its significant increase, you've likely seen your assets grow substantially in a short time. However, the opposite is true during a bear market. A lot of people don't get patient and sell off, thinking that the world is about to end. The investors who actually made money are the ones who either sold before everything crashed, which is almost impossible since timing the market is not as easy as you might imagine, or waited until the crisis passed and stocks began to grow again during the expansion period. 5. Take advantage of gig economy. During a recession, traditional job markets can be challenging. However, the gig economy, known for short-term contracts or freelance work, often thrives. You can join this trend by offering your skills and services online. Whether you're a writer, graphic designer, web developer, or have expertise in various fields, there's a demand for freelancers. You don't need to be an expert. To make money online, start with lower prices and gradually increase them. Skills are recession-proof, as companies and individuals seek cost-effective, on-demand solutions. Diversifying your income streams is vital during economic downturns. Explore platforms like Fiverr and Upwork for opportunities. Embracing the gig economy allows you to transform your skills into a recession-resistant income source while staying flexible and adaptable in a dynamic job market. 6. Avoid debt. If you're unprepared for a recession, you'll likely struggle. Many people go into debt when they can't meet their basic needs. In a recession caused by a financial bubble or inflation, like our current situation, the Fed would raise interest rates to slow down the bubble, making debt more expensive. For example, in 2007, at the peak of the housing bubble, the Fed raised interest rates to 5.25%. During the dot-com bubble in 2000, interest rates were raised to 6.5%. This dynamic often widens the wealth gap, as poor individuals may need to borrow to survive, while the rich can capitalize on opportunities. 7. Precious metals. When the economy gets shaky, think about investing in precious metals like gold and silver. These metals tend to hold their value when other investments struggle. You can invest in them by buying actual gold or silver items or through related investment options like ETFs or mining company stocks. During tough times, precious metals like gold and silver are attractive because of their inherent value. For example, gold's scarcity and the effort required to mine it make it valuable by nature. Unlike some other investments, it isn't affected by economic fluctuations. People also view these metals as a safe way to store money when regular investments seem uncertain. Many turn to gold and silver to secure their wealth. Additionally, these metals have global appeal, making them a good choice during a worldwide economic downturn. If you found this video useful, be sure to like, subscribe, and turn on notifications to not miss our future uploads. See you in the next video.